You know what's funny?
We need a
For
clear
years,
framework
the
for each
crypto
arrest.
industry has been screaming for one thing:
Regulation must follow the rules.
regulatory clarity. Just tell us the rules, they said. We said, can't innovate without knowing what's legal. Well, we should have been careful what we wished for, because the Clarity Act is about to pass. It's moving through the Senate right now. Trump wants it, and the industry has spent tens of millions of dollars, the crypto industry, on lobbying and hundreds of millions on election spending to make sure this happens. And now it is. And when it becomes law, which is probably this summer, it's going to fundamentally reshape crypto in America forever. But here's the twist nobody is talking about. Getting exactly what we asked for might create the biggest opportunity this industry has ever seen, just not where anyone is looking. I'm Jess, and today we're breaking down what actually happens when the Clarity Act passes, and why the real money is about to move somewhere regulators can't reach. So let's get into it. All right, first, some quick context on where this thing actually stands, because the timeline here is important. We know that the Clarity Act passed the House of Representatives on July last year, July 17th, with bipartisan support, meaning both the Democratic Party and the Republican Party both agreed. But in the Senate, things are a little messier, and we're still dealing with this. There are two committees that need to approve it: the Senate Agricultural Committee and the Senate Banking Committee. And as of now, we're still waiting on the latter. We're waiting on the Banking Committee to come to some form of agreement. And we know they have until the end of the month, this month, February, to reach some form of consensus. Now, what they're hung up on is whether crypto platforms can pay yield on stablecoins, meaning exchanges. Banks want this banned, of course, because it competes directly with their deposit accounts. And Coinbase, we hear, is threatening to pull their support for the entire bill if the yield ban passes. So our best case scenario as of now is if the Senate Banking Committee, the banks versus the crypto exchanges, can find some resolution by late February, at which point we could have a full Senate vote in March or April and House reconciliation in May. So there's a process, with Trump finally signing it into effect by the summer. Here's what happens immediately once it passes. First, Bitcoin will probably rally on the news, and we'll probably hear, "We won, institutions are coming" on X. And then we're probably going to see some small correction or sell off due to the classic market dynamic of buy the rumor and sell the news. Every institutional player who was waiting for clarity at this point will have known it was coming since the House passed it in July. And they will have already had multiple months to position themselves. And if you're a hedge fund that wanted exposure, you better bet they did not wait, and they're not waiting for any signature. They will have also bought already. So by the time it's official, that trade will be crowded. And we know that crowded trades get unwound. There's a sell-off. But here's the bigger story. This is what I want to get to. Within the first 30 days after the Clarity Act passes, we're going to see a massive delisting wave. Now, what am I talking about? What I'm talking about is that exchanges right now in America list hundreds of tokens in a legal gray zone. There has been no clarity up until now. Nobody knows which ones are securities and which ones are commodities and which ones are nothing. So the moment the Clarity Act becomes law, that ambiguity disappears. And when exchanges can no longer hide behind "we don't know the rules" pretext, they're going to have to make some calls, some decisions. And under the Clarity Act, a digital asset needs to prove its value is sustainably derived from the use and functioning of the blockchain, and that it's related to a mature blockchain, meaning no single person or group controls it. And we all know, if you've been in crypto for some time, that most tokens can't prove that. So my prediction is that there will be a significant amount of altcoins currently listed that will get removed from US exchanges within the first month. So if you can't demonstrate you're a commodity under the Clarity Act's definition, you're gone. And that's going to create massive selling pressure all at once. And here's what else will happen almost immediately. Every centralized exchange will have to register with either the CFTC if they're dealing with commodities like Bitcoin, or the SEC if they're dealing with securities. And of course, registration isn't free. We're talking about 5 million to 50 million in compliance costs, depending on the size of the operation. Legal teams, compliance officers, auditing systems, reporting infrastructure. What does that mean? Consolidation is what this is going to mean. Smaller exchanges will have to shut down or they will get acquired. Mid-tier platforms that can't afford compliance and those filing fees will disappear. They'll get absorbed by larger platforms or exchanges. And the big players like Coinbase, Kraken, maybe Gemini, they will get even bigger because they're the ones who can afford to play the game, especially as the market is down right now. I can't imagine small exchanges have the budget to pay for these compliance fees. So we'll very likely see a scenario. Mind you, this is me and all my predictions and connecting the dots, so let me know what you think. But we may very well see Coinbase's market share go from around 50 to 70% of US retail volume. So we'll have a scenario where the independent new entrepreneur, the new developer, won't be able to just spin up an exchange anymore. So it may sound sad, like the one thing that made crypto interesting, being permissionless, being open access, where anyone can build, that will die in the US, is what I more or less see being set up. But it's not all doom and gloom, because this is where I believe things get actually interesting. So hang tight. I'm going to explain what I mean and what I see. When the Clarity Act passes, the United States, yes, overnight will become the most regulated crypto market in the world. Clear rules, clear enforcement, clear compliance requirements. For institutional investors, that's great. For traditional finance, perfect. For banks that want to offer crypto services, it's a dream case scenario. But for innovation, for experimentation, for people who actually want to make money in crypto, well, it's all going to move offshore. Because here's the thing, if you're a developer with a new DeFi primitive, a novel governance mechanism or an experimental protocol, you're not going to spend $5 million in 18 months to get CFTC approval. You're going to incorporate in the Cayman Islands. You're going to operate in Dubai or Singapore and build for global markets outside US jurisdiction. Now let's talk about DeFi specifically, because this is where I think everyone's getting it wrong or just not connecting the dots yet. Because the Clarity Act actually exempts truly decentralized protocols from registration requirements. On paper, that sounds great for DeFi, but what does truly decentralized actually mean? The bill has criteria. No single party can control it. Governance has to be distributed, and there cannot be a central point of failure. But in practice, we know that most DeFi protocols have some level of centralization. There's a team that deploys the contract, right? There's a foundation that holds governance tokens, and there's a front-end interface hosted on AWS. So what happens? Protocols will lawyer up and fight over these definitions. And front-end interfaces will geo-block US users just to be safe. And American capital will exit because nobody wants to be the test case, right? And the protocols that are truly decentralized, the ones that can't be shut down, can't be regulated, can't be controlled, those will move their infrastructure offshore. And maybe this is a good time to talk about some of my oldest holdings that are not pumping right now, but are truly decentralized. So let me know if you're interested. I'm happy to prepare a show on some of these tokens. Anyway, back to what we're talking about, because these decentralized protocols, that will move offshore, they will move not because they're trying to evade regulation, but because compliance, we know, kills experimentation. And experimentation is how you find the next Uniswap, the next Aave, the next protocol that does 100x. So we'll see a scenario, where I believe the markets are going to split into two parallel worlds. So in the first world is the US compliant world. Here we'll have Bitcoin, Ethereum, and a handful of SEC, CFTC approved tokens. We'll have registered exchanges, licensed custodians, and all will be institutional grade. Of course, this also means there will be lower volatility, lower returns. However, there will be access at least to traditional capital. It'll be boring, safe, and regulated. In the second world, okay, this will be the offshore DeFi world. Here we'll have everything else. We'll have non-US venues and protocols capturing global activity, global liquidity. Yes, it will be high risk, high reward with both retail and sophisticated investors alike. It will be the true wild, wild west, experimental with innovation happening in real time. And here's my core thesis. In this second world, okay, this is where crypto investors are going to make money. It won't be compliant or regulated because we know that in truly decentralized protocols, they can't be regulated because there's no entity to regulate. There's no CEO to subpoena. There's no headquarters to raid and no server to shut down, just code running on a blockchain. And if you think about the incentive structure here, when compliance costs make it impossible to innovate in the US, all the experimentation, if you think about it, has to move offshore. All the new DeFi primitives, all the yield opportunities, all the asymmetric bets that could 100x your money, though it's never a guarantee. So we see a scenario where the best developers are not going to want to spend 2 years and millions of dollars getting regulatory approval to launch a protocol in the US. Developers want to write code and deploy it and see if it works. That's how innovation happens. And that won't happen in the US anymore after the Clarity Act. It's a little sad. It's going to happen in jurisdictions that don't care or that actively welcome innovation. So we're going to get this brain drain scenario where the most creative builders, the people pushing boundaries, the teams creating genuinely new financial primitives, they're going to leave. And not because they hate America for those that are American, but because the regulatory environment makes and is going to make innovation hard and expensive. The US will end up with institutional capital flowing into Bitcoin and Ethereum, which is fine. We know Bitcoin's extremely valuable. So those will go up, but that's not where the 100x returns will be. Astronomical returns are going to happen offshore in other countries that are solving novel problems with experimental solutions. And that's where the asymmetrical opportunity is. And here's what people don't understand. Regulation is not going to kill DeFi. It's going to purify it. The protocols that survive and thrive offshore are the ones that are actually decentralized. And they have to be, because if there's any central point of failure, any entity that can be pressured, and any team that can be threatened, regulators will find them. So the only protocols that work long-term in the offshore, more degen world are the ones that genuinely embody what crypto was supposed to be in the first place. Permissionless, uncensorable, operating based on code, not corporate policy. No asking permission. No compliance department, just math and incentives. That's the DeFi that will explode after the Clarity Act passes, because that's the only DeFi that can exist outside regulatory reach. So US investors will have boring single-digit returns on compliant products, whereas offshore DeFi investors, people participating in truly decentralized protocols through whatever legal means are available to them, they'll have access to opportunities that traditional finance can't touch. So the irony here is beautiful. By regulating crypto in the US, the Clarity Act makes offshore DeFi more valuable, not less, and returns us to our roots and our original anthem, as I was saying. Because now, after the Clarity Act passes, there will be clear contrast. There will be the safe and boring world and market environment regulated in the US, and then there will be the offshore, more degen, more risky and explosive world that is truly decentralized. And investors who understand the difference can allocate according to their risk profile. So if you want stability, you'll simply put money into Bitcoin through your Coinbase or buy it directly. But if you want life-changing returns that comes with a really high risk premium, you can choose and learn to navigate offshore DeFi protocols that are building the future of decentralized finance outside of anyone's control. So wealth creation doesn't stop. It just moves to places where you don't need permission. But all right, now let us zoom out and talk about who actually wins and loses once the Clarity Act passes. The winners will be truly decentralized offshore DeFi protocols, as they will become the only place innovation can happen at speed. So that's where the alpha is. Secondly, the next winners will be Bitcoin and Ethereum. They will get clear commodity status, which means institutional capital can flow in uninhibited. And this will mean that they will probably pump or grind higher progressively and into the future. And then third, you're going to have Coinbase and other large compliant exchanges gaining notable new market share as they either absorb or just completely blow out any other American platform or exchange out of the water. So it's very likely Coinbase will become the on-ramp for institutional money, which will be great for their stock, but very boring for the industry. And then the fourth winner group will be the traditional banks with crypto licenses, the JP Morgans, Goldman Sachs, Bank of America, because now they'll have the compliance infrastructure and they can jump into crypto with both feet and eat market share from crypto native companies. And then the fifth group of winners will be institutional custody providers like Fidelity Digital Assets, BNY Mellon, and State Street, because they have been building and waiting for this moment. And the moment the Clarity Act gets passed, they will be able to flip the switch and just go live. But now let's talk about the losers after the Clarity Act passes. As I mentioned in the beginning of my video, we can expect a significant amount, I'm not going to put a number to it, but a significant amount of altcoins getting delisted off American exchanges. And this will happen to any altcoin that can't prove their commodity status. So we can expect their value to go to zero unless they do some overhaul of their token economics and protocol. Now, mind you, quick note on it's not going to affect the altcoins that you and I know and I've covered extensively on my channel that have inherent value. They provide value, but we can expect to see them be affected anyway if for whatever reason they're not compliant and don't have their token economics and their protocols explicitly describing, what they are, whether they're a security or a commodity. So there will be a transitionary period. And then the second group of losers will be the US-based DeFi protocols trying to be compliant because they're simply not going to be able to compete with offshore protocols that don't have compliance costs. So this group will either die or they're going to have to move overseas. And then the third smaller group of losers are going to be, as I was saying, the smaller exchanges. Those that can't afford to pay the new filing compliance fees, they will have to shut down or they will be acquired at a fire sale price. Now, here's where I want to plant a seed for an upcoming conversation or video. Let me know if this interests you. Because while the Clarity Act actually includes provisions or language trying to block a Fed-issued central bank digital currency or CBDC, I've made whole videos on this topic. I'll link them below. What's interesting is that the bill explicitly prohibits the Federal Reserve from offering retail digital currency directly to individuals. But here's the problem that I can kind of foresee happening that I hope doesn't happen, but could happen, is that once private stablecoins are fully registered and operating under bank-grade government oversight with complete compliance infrastructure, how much control will get exerted through those regulated intermediaries anyway? Does that make sense? Because you don't need a CBDC if you have perfect visibility and control over every private stablecoin issuer, every exchange, every custodian. The rails are the same. The oversight is the same. And the ability to monitor, restrict, or shut down transactions will also be the same. I think this is a little troubling, which is why I would like to do a full video on this topic. But just think about what happens when every digital dollar, whether issued by Circle or Coinbase or anyone else, flows through the same systems that are completely transparent to the government, regulators. It's basically the same thing. And then think about what makes truly decentralized, permissionless crypto in that world. Not an investment, infrastructure, but we'll unpack that soon. So in the meantime, just keep that in the back of your mind. But all right, let's bring this home with the actual timeline and what to expect. Okay, because by this summer, because there is a process, we can expect the Clarity Act to be passed in some shape, form, or fashion, at which point it will have an effect on Bitcoin. Bitcoin's going to pump, and then there will be some pullback. Within the first 30 days or so, I'm not giving exact numbers here, we can expect, naturally so, just connecting the dots, that a massive amount of altcoins will be delisted because they're simply not going to be able to prove that they're commodities. Next, compliance costs are going to force smaller exchanges to shut down, at which point we can expect Coinbase's market share to explode. And then in the following months, we can expect also, just connecting the dots, that DeFi protocols will move their infrastructure offshore and front ends are going to block US users. But it's not going to be over for DeFi protocols. Innovation is simply going to migrate offshore to other markets that are more innovation friendly, like Dubai and Singapore. And then we're going to see the splitting of the crypto market into two worlds, into the US compliant world and then into the offshore, more degen, high risk, high reward world. And then, yes, thanks to the Clarity Act, we are going to see, I believe, more institutional money entering into Bitcoin and Ethereum, which may very well make it just continue to grind up. But as I was saying, what is going to be so interesting in this splitting of worlds is that while the crypto industry spent years and tens of millions of dollars lobbying, plus hundreds of millions on election spending, fighting for regulatory clarity because they thought it would bring legitimacy and institutional capital and mainstream adoption, not only are they going to get, I include myself, are we going to get exactly what we asked for, but it's also going to fundamentally transform the industry into these two worlds I'm talking about. In the US, crypto is going to become an asset class. Bitcoin and Ethereum are commodities that you'll now be able to buy straight through your bank. This world will be stable and regulated and institutional, and it's going to look a lot like traditional finance. But in the other world I'm talking about, where the alpha exists and will move to, I believe, in this world, crypto will remain a revolution. Protocols that can't be stopped, money that can't be controlled, and a financial infrastructure that exists outside of any government's reach will go back to being what crypto was built on, its true ethos of being permissionless and uncensorable. So regulatory clarity through the Clarity Act is not going to destroy crypto, but it is going to split it in half. You can have compliance and institutional capital, or you can have permissionless innovation and asymmetric returns. And in the US, after the Clarity Act, you can't have both, but you can offshore. So look, the Clarity Act passing is extremely significant. It's a regulatory milestone. It will bring stability and institutional money to Bitcoin and Ethereum. So that has value. But if you think that's where the opportunity is, you're not paying attention. The opportunity is in truly decentralized protocols that move offshore, in DeFi that can't be regulated because there's no entity to regulate, in building and participating in parallel financial infrastructure outside government control. And not because of ideology, but because that's where innovation happens. And innovation is where returns come from. Regulation creates clarity in the US, but it creates opportunity everywhere else. So if you found this breakdown today helpful or interesting at best, or have questions and want me to get into some of these topics in grander detail, I'm so happy to do so. I hope it made sense. And then of course, hit the like button if you appreciated my content because it's extremely encouraging, because I do put a ton of work into every single video. And then of course, subscribe if you haven't. And most importantly and most meaningfully to me would be if you shared my video with a new friend or a new family member that's still on edge or has questions about what's happening in the world. And then of course, stay tuned because we have a lot to talk about regarding what comes after regulatory clarity. I love you guys so much, and that's a wrap for today's video. Take care.